happy that you guys are all here today. For those of you that may not know me, I'm Brianna Beers, that's Bree to my friends, and I own the newly rebranded Bree Beers and Associates, formerly Lippa Beers and Associates. My firm helps small businesses and individuals with tax prep and tax planning. Tax planning is our jam because it's where we get to strategize with our clients to minimize their annual tax burden and keep that extra cash in their pockets so they can invest it back into themselves and into their businesses. So you guys might be watching this in a variety of places. If you are not in our awesome Facebook community, Money, Taxes, and Finances, and you are a business owner, then you need to hop on over there and join that group. It's an amazing and supportive community. We do 2 live sessions every week. On Mondays, we have our financial trainings at 10 a.m. Mountain Standard Time, and Fridays are our updates and Q&A sessions. Normally, these are at 2 p.m. Mountain Time. So let me start with the EIDL loans because there's a little less to talk about on this front. So then we can save all the time for the PPP stuff. So EIDL. If you do not know what this is, then you got to go back and watch all the previous videos. But this is our emergency injury disaster loan. And this week, the applications for the EIDLs reopened for all types of small business. Okay, so if this is something that you heard about and you wanted to apply for, but you realized it during the closed closed time, you can get back in and log in now and reapply, or not reapply, you can start applying. If you already applied, there's no need to reapply. This is just for those of you that missed out the first time around. So just to remind you guys, the EIDL is a loan, but it does come with a grant portion. So that grant portion is $1,000 per employee, and you do get $1,000 if you're a sole prop as well. And remember that if you also have the PPP loan, the EIDL grant portion is going to be subtracted from that forgivable amount of PPP. So if you're applying for it, or if you haven't yet, but you're going to, a few little quick tips, okay? So first, you want to make sure that you correctly answer the cost of goods sold. So when you're applying, it's going to ask for your gross revenue, and then it's going to ask for your cost of goods sold. Cost of goods sold, you guys, is only the cost related to creating a good to sell. And what that means, so if you're in a service-based industry, you probably don't have cost of goods. But let's say if you make t-shirts, or you make water bottles, or you create books, stuff like that, then you have a cost of goods sold. So, and it's the cost associated with manufacturing that good. Because this is so important, because your loan amount is factored or is based on your revenue minus your cost of goods sold. So if you don't want to overstate those costs of goods incorrectly on your application. So make sure you're accurately recording those costs of goods sold. And you guys, the best place to look is go look at your 2019 tax return. Okay, your tax return tells you your revenue, it tells you cost of goods sold, and whether you're doing a Schedule C or you fill out a partnership or an S Corp return. Okay, cost of goods sold is broken out from all your other expenses. So that would be where I would suggest you look if you're not sure. But yes, if you're a service-based industry, you shouldn't have cost of goods sold. All right, and if you incorrectly put in cost of goods sold that you don't have, you're going to decrease or possibly be denied your EIDL. Okay, so make sure you got that number correct. And then the second thing is to make sure your name and either your EIN or your social security number that you fill out on the application matches exactly with the information that the bank account that you're using has. All right, if you don't, then a lot of times that's been delaying the grant. And then you guys, so a little bit to walk you through the process. So you fill out the application, make sure that you put in your information all correctly, make sure you do your cost of goods correctly. And then after you apply, your loan offer is actually going to come via a portal, and you'll get the notification via email. All right. And at that point, you log into the portal, you create your portal access, and they tell you how much they're offering you for an EIDL loan. And at that point, you can accept the full amount or you can accept less. It's like a sliding scale. And just a few things to remember, that there are limits on what you can use those funds for, and that you are allowed to accept the grant money without accepting the loan. We're still a little unclear on the actual process for this because we're getting mixed messages and mixed answers from people at the SBA, but you can. The answer is yes, you can accept the grant money without accepting the loan. It's just a matter of the process to make sure that runs smoothly. And then I just want you guys to make sure, again, that you go back and watch some of the EIDL videos from, they're pretty recent. to make sure you understand what it is you're getting, what exactly this an EIDL loan is, what it can be used for, all that stuff. Crystal says, when I originally filled out the EIDL app, I didn't have the PPP. Now I have the PPP. Do I need to somehow update my EIDL app to disclose the PPP? No. That's a great question though, Crystal, because specifically the EIDL application specifically asks if you received an EIDL between, and it gives specific dates. And I think it's through like April 26th. And if that happened, if you got an EIDL before you got a PPP, they required you to refinance into it, but now that's not a thing. And so what happens now though is, so you very well can have two loans. Okay, so you're going to have your PPP, which until you get it forgiven is a loan. And we'll talk about that in a minute. We'll talk about the PPP in a second. And now you have your EIDL. So Heather says the paperwork for it says I can't have any other disaster relief funds. I've already received PPP loans. I was also qualified for the unemployment in my state. Everything says something different about which ones I can have together, if at all. I know it's all backtracking on stuff you've covered, but also then I want to reduce the initial amount I accepted from them. I clicked on the full amount and I don't know what I could use it for. If you've already, you're going to receive the whole amount, Heather, of whatever the EIDL, you can just pay back immediately whatever you don't need. And I think everything is in your portal. I haven't logged in there in a while, but I'm pretty sure. So let's say you took 50,000. Now you're like, oh, I really only want to take 20. Yikes. Go ahead and pay that 30,000 back right away. There's not a way that I know of to adjust it after you've been approved or after you've accepted it. So that's what I suggest there. As for the paperwork says you can't have any other disaster relief funds. No. So specifically, you can only have one PPP. You can only have one outstanding EIDL at a time. And then unemployment, totally different. So now I want to talk about PPP. A week and a half, 2 weeks ago, the government passed, the Congress and the principal, the president, thanks free words, the president signed into law the CARES Flexibility Act. Okay, and a big part of that was expanding the rules and the how we could use the PPP funds. Okay. And we knew the rules, but we were waiting for the Treasury. We're always waiting for the Treasury to actually come out with interim rulings, okay? Guidance on how we go through these things, how we interpret different things. Okay, so I'm going to go through the main bullet points that you guys need to make sure you understand and are paying attention to. Okay, but before I do, I want you to, a few things. It's important to know when your loan date was, okay? Because if you got a loan before June 5th, you have certain rules that I'll talk about. If you got your loan after June 5th, you have certain rules that apply to you. And I will specifically tell you those rules, but you need to know when your loan date was, okay? Before or after that cutoff. So old loan, new loan. If you haven't applied for a PPP yet, but you've been on the fence, you need to do it. The cutoff is June 30th. They still have over $100 billion left, okay, to give out. But time is running out. And I don't think it's yes, before the cutoff, because I don't think it's we haven't allocated all 100 billion. We'll extend it. There's nothing specifically that says that. It says June 30th, okay, which means you just need, I believe you just need to apply by June 30th, okay, but why wait? So if you're out there listening and you've been like, I'm avoiding the PPP, and now you're hearing about the Flexibility Act, you're like, well, shoot, maybe this works for me now. That also said a lot of people weren't applying for the PPP earlier because, that 8 weeks they weren't back, they weren't working again, their business wasn't back, and they're like, I don't have a way to spend it on payroll. Well, now, A, you have the 24 weeks, right? B, a lot of the businesses are back and working and ramping up again. Okay, so you do have places to spend the money. And 3, they've changed the spending requirements. All right, so let's talk about that. So first, the required payroll spending was decreased from 75% to 60%, meaning that you have to spend 60% of what you receive on payroll in order for that other 40% to be used on the other approved expenses and be fully forgiven. Okay, so it goes back to, if you don't spend 60% on payroll, then you can't spend the other 40 on those other approved expenses and get it all forgiven. Okay, so you got to get to that 60% first. Other 40% does still have to be used on approved expenses. Business rent, right? Business mortgage interest, business utilities, business debt interest. That's required. Forgiveness or not, you have to spend it in that way. So then we talked about June 5th, right? Loans issued after that June 5th cutoff they now have a 5-year repayment period on the non-forgivable portion. Okay, 5-year loan. If you got your loan issued before June 5th, you are still on the 2-year loan. That said, I was on a call yesterday with an SBA regional director that part of a region is here in Colorado, but she said that you can ask your bank to extend it. There's just nothing in the Flexibility Act that forces them to extend it. But she says that that is up to the bank, and they have the ability, and if they want to extend that to 5 years if you want it to be extended. Okay, so a conversation you have to have with the lender you got your PPP through. Now, you guys, we talked about there's now a 24-week period, a 24-week covered period. Okay, so for loans dispersed after that June 5th date, you have to use this 24-week cover period. You don't have a choice. For loans dispersed before the June 5th, you actually can choose. You can choose to keep your 8-week period, or you can expand to the 24-week period. I've been getting questions, how do I tell my lender which one I'm using? You don't right now. That's not something you have to report now. I believe it's something you end up dealing with when you complete the forgiveness application. You don't have to make that decision right this second in terms of letting your bank know. You probably need to make that decision, as a lot of you that do have the option to take the 8 weeks are probably nearing or have passed your 8-week period. That said, if you've passed your 8-week period already, you're not locked into it. Okay, I'll give you my example. My 8-week period ended June 4th, I believe. It ended before this cutoff date. It even started. Doesn't matter. Because my 8-week period ended, I'm not locked into it. I can still be like, nope, I want to take the 24 weeks. Maybe I didn't spend all the money, right? Maybe I was like, oh, I still have $3,000 that was unforgiven, had my 8-week period ended. But now I can extend that to 24 weeks. I can spend that other $3,000 on qualified expenses and get it fully forgiven. So another part is for those opting for that 24-week period, another big thing is that the forgivable portion of owner's pay has been increased from that 850 seconds that we continued to talk about to 2.5 months, which is what your loan was based off of, right? So again, if you opt for the 8-week period, you still only get to count 850 seconds of your owner's pay as forgivable. But if you opt for the 24-week period, or you're forced to take the 24-week period, okay, you can take 2.5 months of your pay and get it forgiven. So sole props, let me talk to you real quick. And Heather, I'm about to answer your question. So Heather says, I don't know what to use the rest of my PPP for because I don't have any expenses that appear under the requirements. Do I just give it back as a payment, especially if I'm taking the EIDL? So hold on, let me see if this helps. So for my sole props who have a 24-week period. Okay, let's assume, we got to start with, you got to make sure you got the right loan amount. We know a lot of banks were lending off the wrong numbers. They were calculating differently. But if your loan is based off of line 31 of your 2019 Schedule C, okay, if they took that number and they divided it by 12 months and then they multiplied it by 2.5 months, because that's what you get for a loan, then you got the right amount. Okay, as long as you didn't get more, what I'm about to say to you applies. All right, so if you got the right amount of PPP loan to begin with, you can take it all as owner pay. You can just say you paid it all to yourself. Okay, so let's put this in numbers. So the max was 100,000, right? So let's say line 31 of your 2019 Schedule C was 100,000 or higher. You're maxed at 100,000, no matter who you are, right? Per employee or pay. So 100,000 divided by 12, yep, times 2.5. You think I would have memorized this number yet? Your loan would have been $20,833. And remember that as a sole prop, your pay is just what you take out of the business, right? And there's no way, I think we've talked about this on past trainings, there's no way for you to actually track this. We've talked about, do I have to take the money out? Do I have to show that I paid it out of my business to me personally? There's no documentation requiring that. Right now, and we'll talk about the new EZ form in a second and the documentation required, but right now, what we're understanding is that, so let's say, that you can take that $20,833, whatever your 2.5 months was, right? You can just take it. You can take it out of your business as a draw. That's how Schedule C's work, right? Or how sole props work. Okay, and the only proof you have to submit when you turn in your forgiveness application is your 2019 Schedule C, so that they can use that number to back calculate, make sure you didn't take out too much. So, and then Heather, you can use it on whatever you want, because at that point it's your money as an owner. You can use it on whatever personal expenses, or you can just leave it in the business as if you like contributed it, so you don't actually have to do anything specific with it. It should, Heather, as long as they gave you the right amount, be automatically forgiven. And then let me again, Crystal, I'm not forgetting your question, but let me explain again why this is actually beneficial to you guys compared to my S Corps and my other business owners who are employee owners, meaning we have to take a W-2. Okay, and that's me. I'm an S Corp. Even if you have, and listen to me, guys, if you're a sole prop, okay, even if you have those other qualified expenses, hear me out real quick. Okay, I need you to listen to me. I'm going to give you some like gold nuggets right now. So let's say you're like, oh no, I only want to take the 60% as owner pay and I want to spend the other 40% on my business rent. Okay, let's say that. Or maybe you have W-2 employees in addition to you as a sole prop, right? And you're like, well, I can pay this money to my employees and take less as an owner draw. That's good if you need to if you're trying to get unemployment. We'll come back to that. But if unemployment is not a concern for you, again, you're going to be you're going to benefit more if you just take it as owner pay. And let me tell you why. So if you guys remember, forgivable PPP money is not going to be considered income to your business, meaning it's not going to show up on Schedule C as revenue. However, the IRS did announce, and we're hoping this is going to be changed, but for now it has not been. The IRS announced that expenses you're paying with PPP money, with forgivable PPP money, is not going to be tax deductible. Okay, and as a sole prop, you're taxed on your net profit, regardless of how much money you take out for personal use. Okay, and your net profit is not going to be affected by this PPP income, right? And again, it's not going to be affected if you just take the money out as owner pay. But if you opt to spend 40% on business rent or any of those other qualified expenses, you don't get to deduct those anymore. So let me go real quick. Scenario one, you do what I tell you to do. You take the full amount of PPP as owner pay, you're good. You still pay all those other expenses you have, right? You still have business interest, you still have business rent, and you get to deduct them on your Schedule C. If you opt to use your PPP funds on those expenses, you don't get to deduct them anymore. So they're almost letting you double dip. It's a loophole right now. We'll let you know if it changes, but as of today, June 19th, okay, it's a loophole that's there. So use it. And if you use it and they do come back and they're like, we're going to change this, you're no worse off. Okay, but if you do it the way I'm telling you to, you're going to be better off if they don't change the rules. Other owner employees, so my S Corps, my C Corps, those of you that are on payroll, okay, that you have to pay a W-2 to yourself to pay yourself. All right, you are now able to include 2.5 months worth of wages as well, but the new max is now $20,833.33 if you're on a 24-week period. Again, it's still the old $15,385 if you're opting for the 8-week period. But if you opt for this 24-week period, you get to increase that to $20,833. All right. That said, on all of your other employees, if you have any high compensated employees, their new cap is now going to be like $46,000 because you get to use 24 weeks. All right. So you get to use a little bit more in payroll than you used to be able to. So I answered Heather's. Okay. Crystal says my 2019 Schedule C line 31 was 0. However, the bank based my loan on the last 12 months of earnings. Okay. Does this mean that none of my loan is forgivable because of my line 31? So this is an area that I'm advising with skepticism as it's written now. So it's not written well. So I'm going to tell you what I believe is going to happen, how I believe that's going to be interpreted, because I'll tell you the way it's written now, it's written exactly like that, Crystal. They're saying, oh, nope, you don't get to get it forgiven because it specifically says that you need to turn it in your 2019 Schedule C line 31. But this is what I need you to do. So it was based off of, you said the last 12 months, okay, of earnings. So figure that amount out, right? So start with, did they give you the right amount? Okay, so take that 12 months of earnings, your net. Okay, this is where a lot of some banks are going off gross. That's not going to work for your forgiveness. Go off the net, okay, your net income for that 12-month period they used. Take that, divide it by 12, multiply it by 2.5. Okay, whatever that number is, that's the number I believe with a little communication with your bank and probably some explanation, they will forgive you for. Okay, because that is the spirit of the law. That is how it's supposed to be. They should base your forgiveness off of whatever period they use to give you the loan. Okay, that part of the guidance right now is just very vague. It's very gray. That's what I would do. So it might just need some communication with your bank and making sure, Crystal, that you are documenting correctly. So what I would say, and when they ask you for your 2019 Schedule C, line 31, when you go to fill in your forgiveness, give them your P&L for that 12-month period instead. The 12-month period that you gave the bank to apply for the loan, give them that same documentation when you apply for forgiveness, because that's what they should be going off of based on how the rule is. Okay. Another one, a lot of new businesses were able to use January and February of this year, okay, as their income basis, and then use those calculations. So I'm going to tell my new businesses out there the same thing. When you turn in your forgiveness application and they ask for the documentation, don't give them your 2019 Schedule C because they're going to say it's wrong. Give them the documentation that matches what you applied with. Okay. So again, in Crystal's example, it's the last 12 months. So I want you to run a P&L for those dates. If you got your loan based off January, February, because you were a new business, that's what I want you to submit. And then when the bank comes back and says, oh, this is what we need, you correct them. You say, no, you don't need that because my loan was based off this. All right. I think you guys are going to have a little more work to do, a little more dialogue with your bank, but it should be fine. So Heather says, when do we know when that happens? Because my girl and I went over my stuff and figured out the amount minimal to be forgiven that I could take as owner pay. When do we know when that happens? Tell me when. I don't know what I was talking about at the time, Heather. Sorry. Will you tell me when do we know what happens? Because my girl and I went over my stuff and figured out the amount minimal to be forgiven that I could take as owner pay. Elaborate on your question, Heather, and I will come back at you. Let me go through these last few pieces, Heather, and then maybe it'll trigger what I was talking about and just kind of elaborate on that question a little more. I think I know what you're asking, but let me keep digging and then ask your question again. Sorry, I'm usually much better at answering these. Okay, so they came out with an easy form. I'm really excited about this. So I don't know if any of you guys, if you guys have been with me for a couple weeks, you know that the original forgiveness application is 11 pages long, was 11 pages long. It read like a tax return. Okay, it was like, here's your application, but then here's a schedule, here's a worksheet, and then you calculate stuff. And me, Jamie Troll, who I was telling you about, and Kelly Vincent, two other, I was about to call myself awesome, but the three of us created a group, and we created this amazing PPP tracker that essentially completed your application for you. Okay, thousands of people downloaded it and used it, and it worked wonderfully. And now they've come out with this. So we are actually, I say we, I'm not an Excel magician like these two women are. So basically what I'm in charge of, like, I help consult with like the law and how we want to interpret things. So there's three of us doing that. But then those two build all the formulas and all the fanciness that you're going to see in this amazing tracker. And then I just test it and try to break it. That's what I do. I just try to break it. And if I don't break it, then we call it a win. Anyway, so we're building the new PPP trackers. There'll be one for the easy form and one for the revised long form. That's what I'll call it. Long form, easy form. Fingers crossed we get it done next week. It should be a pretty fast process. So the long form was streamlined a tad, but like I said, the biggest news is this easy form. It's one sheet with one sheet on the front with some information. And then on the back, it just has a bunch of certifications that we'll talk about in a minute. All right. So the question I'm asking is, which one should I use? Okay. If you qualify to use the easy, do it. Okay. This thing is so amazing, so quick, so much less headaches. All right. So if you qualify to use it, use it. Yes, I did see. Oh, she is amazing. You three are awesome. Thank you. I'm waiting for the updated and the EIDL. I have the EIDL tracker. I will look for it when I'm done with this. I will post them both in here. That's what I usually do to try to make things fun, right? Oh, you're a lady after my own heart, Linda. Okay, so 3 ways to qualify to use the easy form. One, and I know this is so many of you in here, if you are a self-employed individual with no employees, at the time of application, that's a key. So even if you've hired employees since you applied, just to, whether it was to use the money or because you needed the help, whatever. If you had 0 employees when you applied for the PPP loan, okay, it's just you, you're a sole prop, you're a single member LLC, you're an independent contractor, whatever you are, easy form for you. Boom. Okay. For those of you who are like, man, I have employees, so can I still use the easy form? Yes, under 2 conditions, if you fall under one of these 2 qualifications. So first, if you did not reduce the salary or the hourly wages, depending on how you pay your employees, if you did not reduce anyone's pay by more than 25% during the covered period of January 1st through March 31st. Wait, hold on. Compared to the period. Words are important, people. Words are important. So so what that's saying is if you look at each of your, let's say and it's not who, it's how. So let's say you had 6 employees at the time. Okay. If you look at all of their pay, whether they're salary or hourly, okay, and you paid them all at least 75% of what they were making back then, okay, back then being January 1st through March 31st, compared to your covered period, right, this new 24 weeks, okay, or the 8 weeks if you're still using that. But I think most of us at this point are like, why would I use the 8 weeks? 24 is way better. So if you didn't reduce anyone's pay by more than 25%, and there's an and, you didn't reduce the number of employees or the average paid hours for your employees from January 1st to the end of the covered period. Let me start with, this is worded terribly right now. We're hoping they fix it, because the way it's worded now makes it sound like you could have never reduced the number of employees. And hello, I think we all did at one time or another. But when we reread it, when we reread the rules, when we step back and look at the big picture, what they mean is on January 1st, or what we think they mean, how it should read is however many employees or however many hours you paid out on January 1st compared to the end of your covered period. Okay. If those are the same, you're safe. So that's number 2. So number 2 is that you didn't reduce the pay by more than 25% and you didn't reduce the number of employees. We don't like that they like to change the comparative period and stay consistent, people. Come on. But they didn't. Okay. The third way you can qualify to complete the easy is, again, same first requirement as the last one. If you don't reduce the number of hours for your employees by more than 25%, and you were unable to operate at pre-February 15th levels because of COVID, OSHA restrictions, very specific reasons, right? So this is going to open it up for a lot of you guys, okay? So I'm talking to my event-based businesses, all right? You were not able to operate at pre-February 15th levels because, hello, you're not allowed to have, we're not allowed to have gatherings. Restaurants, same thing. We're all on this 50% restriction, craziness, so you're going to fall under that third one. So those 3, I'm going to go over them real quick one more time. If you're a self-employed individual with no employees when you applied, easy for you. If you have employees and you didn't reduce their pay and you didn't reduce the number of employees you had, you're good. Easy. Or if you're an employer and you didn't reduce the number or the wages, you didn't reduce their wages or their salary, and you had to cut people, right? You had to reduce the number of employees because of COVID, OSHA restrictions, reasons. Boom, easy. Okay. That last requirement, okay, it's on, let me read it exactly, because people are gonna be like, oh yeah, sure, but that wasn't all of us. Okay, so what it says, let me read the exact words, just because it is very specific and I don't want to guide you guys wrong. So it says the borrower was unable to operate during the covered period meaning our 24-week period, right, at the same level of business activity as before February 15th due to compliance with requirements established or guidance issued between March 1st and December 31st of 2020. So any guidance that has been issued by the Secretary of Health and Human Services, the Director of the Centers for Disease Control and Prevention, or the Occupational Safety and Health Administration, that's OSHA, related to the maintenance of standards of sanitation, social distancing, or any other work or customer safety requirement related to COVID-19. So that's pretty broad. And who I'm thinking like who it doesn't apply for, right? Or two, if COVID made you realize that you can work with less people, but your workload didn't decrease, or nothing required, like let's say you can work remotely, so you didn't have to cut people because of space or work conditions, you're not going to qualify under this one. All right. So there's a few people that this isn't going to cover. So I just want to be clear. But for most of us, most of you guys out there, you're going to be covered under one of these three things. Finally, there seems to be some flexibility here, okay, that should allow so many of you guys to file the EZ that we kind of talked about. So there's certifications on the back of this application, that says I attest that I couldn't, that my business couldn't operate. I attest, and multiple things. So it's terrible when I show things, but those are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 attestations. Okay, so what I suggest to you guys is that you read through those attestations on the back of the EZ form. And if there's anything that you're like, I don't think I can sign this, or I don't know if I can sign this, let's talk about it. Okay, let's talk about why you think you can't sign it. And let's see if there's a way, something we can adjust or move around that says we can sign it. Okay, so that's it. Those are the big ones. There's a few other things that I wanted to talk about, but I think that's overload for you guys. Can I count the amount of rent I write off for a home office as business rent? So, area of grayness, okay, is the home office expenses. But Crystal, what I would say is start with what we talked about. Take your 2.5 months of net pay based out, because Crystal, you were the one that was based off the last 19 months, last 12 months. So take your net profit from the last 12 months, divide it by 12, multiply it by 2.5, figure out what that number is, and compare it to your full amount. And really, it should be the same. And if it's the same, and you can spend it on whatever you want at that point, right? So you can spend it on your rent. Let me see this other one. So if for some reason I can't take it all as owner pay and have it forgiven, gotcha. I should have kept scrolling. So yeah, so let's say they gave you more than they should have. Okay. So let's say when we do the calculation I just said, let's say you should have got $10,000. All right. But they gave you $12,000. Okay. Take that full $10,000 as your owner's pay. Okay. And then you're left with this $2,000. That's where you start spending it on those other things. Right. And your question is, can you use it on your home business rent as a home office? Document. Okay. And I'm going to tell you this for rent or mortgage interest or utilities. So all those expenses that you normally take under your home office, document the crap out of it. And also remember that you can only take the portion that your home office is. So and what I mean by that, when you figure out how big your home office is, so let's say it's 100 square foot room, it's a 10 by 10, so it's 100 square feet. Let's say your whole house is 1,000 square feet, right? Then 10% of your house is home office. Therefore, you can only take 10% of your business rent, or of your home, I'm sorry, not business rent, of your rent, of your utilities, of whatever, as business rent. Again, this is an area that they have not told us one way or the other. We are assuming because it shows up on your Schedule C as an expense that they're not going to have a problem with it. I think what we're going to find is some banks are going to just be like, here you go. And other banks are going to be like, what is this? That said, I'll just give you my last 2 cents before I let you go. Document, like I said. And I really believe that when you fill out this application, because all of those attestations, those certifications that you sign on the back of the EZ form or that you complete with the regular form, basically say, yes, I am providing correct information. I am, saying everything falls back on you. Okay, so even if, let's say they zip through it and they prove everything, which I think because the bank really has no responsibility here, they're going to just bust through these and be like, forgiven, for everyone that applies for it. But you want to be prepared should the SBA come back in 2 or 3 years and say, okay, I want to see where you spent your money. right? I want to make sure you spent it right, that you can justify how you spent it. And we don't know how lenient or how not, how strict they're going to be at that point. But my guess is when you have, you have your PPP tracker spreadsheet all set up, and then you have copies of all your expenses or deductions, or, your qualified expenses to go with it, I think you're going to be safe. But the point is having the documentation. Again, if you have, any further questions or anything, go ahead and post them in the group. Okay, go just post in the group. Tell me your question. Tell me, and we'll get to you. Either I'll respond to you, or we'll address it in next week's Q&A. All right. Thank you guys again for joining me. I really appreciated having you guys here, and I will see you guys on Monday.